Good morning, traders. Welcome to the weekly preview. My name is Dan Hodgman, and as you can see, sitting next to me is not Mark Meadows. Mark has been replaced by one of our funded traders, actually, Yose de los Santos. Yose, thank you for being here.
Thank you to you for letting me in. God bless every one of you that will see this video. Good morning, good afternoon, good night, depending on what time you're going to look at us. So it's a pleasure to be here.
I'm glad to have you here. Yose is from the Dominican Republic. He's in Chicago for the weekend, enjoying some time. We were able to get him into the office and figured why not bring him on here. So if you do have questions for him while we're going, don't hesitate to drop them in here. But other than that, the point of this show every week is we take a look at the week ahead. What's coming out in front of us? What do we have to look forward to? And kind of what are our thoughts behind it? And so we all know where Mark stands on a lot of this stuff. So we're going to see where Yose stands. Obviously, Yose, the talk that is this week, everyone's talking about, everyone's concerned about, everyone's thinking about is the Fed. The meeting starts tomorrow, Wednesday afternoon. We should be seeing if this rate cut's really a thing. What do you think about it?
I think the most important is not what the news said or the Powell said, is what the market is going to do.
Exactly.
So if they lower the rate, okay, and the market goes up, then I will go up. I think that is the point.
It's about as simple as it gets. Keep it as simple as possible when it comes to this subject. Whatever the Fed does, there's so many different ways to look at it. There's a thought about it could be a very hawkish rate cut in the sense that, hey, we're going to give you this 25 basis points and we're done. And that could send the markets in a tizzy one way or the other. It could be, hey, this is just the start of it, and it can send it in another direction. So there's a lot that can happen. And I like what Yose says is wait for them to give us some information. Wait for that market to tell you what's going to happen. I've been saying a lot lately. My point that I'm trying to make lately has been trade the reaction, not the emotion. So when that number comes out, everyone's emotionally attached to what's about to happen, and the markets go crazy.
Yeah, I can have some idea of what will happen, but if the market do the opposite, then I'll have to change to do what the market is telling you.
Exactly.
So it's not to trading what I think is going to happen, it's to trade what is happening. I think that's the point. To adapt to the market, my positions on my trade is the point.
Exactly. So adaptability, that's really the key here. Make sure you're adaptable entering into this big number, this big release, this big economic event, because it has been 11 years since 2008 was the last time the Fed even considered cutting rates, so that they are going to be considering cutting rates tomorrow, not tomorrow, Wednesday. And so the meeting starts tomorrow. We're going to see these markets, we're going to see them thin up. We're going to see volume kind of die off just a little bit, and maybe they're going to be a little bit more timid, and if there is a directional move, it may want to go a little bit quicker, and we got to be cautious of that. And so the one thing we always say is manage your risk, and if your risk appetite is not big enough to trade bigger swings, maybe it's important to stay away for right now, for at least the short term, until we see what comes out on Wednesday.
Yeah. I trade NASDAQ, and what I saw this morning was the NASDAQ was falling down. But most of the time when the market's going down, it's because they are getting ready for the up.
Right.
That's my opinion. So I think maybe, it's just my personal opinions after. I don't know what is going to say at Powell, but after what Powell speak, I think the market's going to go up.
Well, I guess
because the market have their own opinion too.
Exactly.
I can say whatever I want, but when I see the chart is big. You can see where if the big institutions are entering a position in some price or level. So okay, I have the level, I have this one. Let me see what is going to happen in this level. If they break out, okay, then the party is up.
Exactly.
Go down, the party is down. That's it.
So Jose's got a plan going into this. He knows that if the market goes up, he knows what he's looking for. If the market's going to go down, he knows what he's looking for. And that's what you have to do every single time we enter into these major market shaking events. Now, the crazy thing is, it's not just the Fed week. There's a lot more this week that's coming out. We have earnings is continuing. Apple is tomorrow. Apple,
nice.
Market mover. You're a NASDAQ guy. Yeah. You're going to be watching Apple tomorrow.
I love earnings. Because earnings get volatility to NASDAQ. And NASDAQ move,
all over the place.
Quickly.
All over the place. And Apple's going to be a big one for you tomorrow. I'm sure you're going to be watching that.
Yeah.
And wait, that's not all. We also have the U.S.-China trade talks are continuing this week. And that one's going to be really interesting because that could be, no matter what happens with the Fed, it could be this push and pull on all these equity markets coming out this week.
Yeah. Most of the time, in my experience with earnings, I have saw that after the earnings, the market finish up. Most of the time, that's what I've been looking. It doesn't matter how maybe one company goes back or the other company goes up, but at the end, the market finish up.
Exactly.
So that's my experience.
That's your experience, and that's the important thing. Is we talk a lot of times. There's so many educational programs out there. There are a lot of people trying to help you. There's countless indicators, but the most important thing is your screen time. Getting in front of it and just experiencing how that market moves. Jose, with that question, how long have you been trading?
I have been trading like 2.5 years. So I knew a baby here. I know I am a baby.
But you've found what's worked for you, and you've been able to take, we were talking about this before we got on, Jose's been able to take his experience. He's been funded with us a few times now. He's been able to take that and create his own account. You've been able to grow that account, and now full-time trading, right?
Yeah, full-time.
So in 2.5 years, Jose was able to start from the very beginning and now has created a full-time job out of this. And that's the goal, the freedom.
Yeah, I leave my job when I get funded.
You left when you got funded.
When I get funded, I said, okay, quick.
Good for you. Jose, we got a question for you from one of our traders. Jose, how long have you been trading the NASDAQ? And what did you trade before that? And what brought you into NASDAQ? So how long have you been in the NASDAQ? Why'd you get there? And what were you trading before that?
First, I started with S&P 500. But one day I was looking NASDAQ. And I saw that NASDAQ have more intensive movements. For example, NASDAQ can fall in just 15 minutes, maybe 40 points in just a few minutes. And I said, oh, it's more easy to get 200, 300 US if the NASDAQ fell 1,000 US than in the S&P 500. Then I changed to NASDAQ. When I begin to see NASDAQ, nobody teach about NASDAQ. Nobody. There was no information about NASDAQ future, and it's very volatile market, but it's mean money too.
Yeah.
You have to be careful because it's more volatile, but I love it. I love risk.
Absolutely. Well, that's the thing, and that's a great point to bring up. Trading NASDAQ
after that, just that.
It's a tough market to trade.
2 years focus in the same market. Because a lot of traders, they change market, 1 week on one market, the next month for the market. Every time you change the market, you are starting again.
Exactly.
Because every market have different personality. Every time you change an indicator, you are starting again. So this can become a training process. You do one thing, then you change it, and then you overcome again, and then again, and then again. You can have several years changing scene, but you are doing the same. The problem is not the indicator. The problem most of the time is not the market. The problem is here.
Oh, 100%.
So I think the focus have to be here, not in the chart, not in indicators, in my mind.
Well, that's what they say. Trading is 90% mental, 10% actually trading. It's about controlling ourselves. And that's one thing that you mentioned when you're looking at the NASDAQ. It is a volatile market, and you have to understand that as a trader, what works best for you. And some traders, they like the little bit slower S&P. Maybe they're going to find more opportunity there because the NASDAQ can kind of snap on you pretty hard, and it gets a little difficult.
Yeah, for me, trading is about statistics. 50% is about to have a trading plan and to know when you enter and why you are entering, why you are buying, why you are selling. That's 50%. The other first 50% is to control when the trade goes against you.
That's the most important thing. One thing I stress and I think is so important is every trade you make, whether you're going to be, doesn't matter if you're long or short, it's knowing where your out is. So where's my profit target, and where's my stop going to be, and at what point do you say, hey, that's where I'm getting out, and it's based off of each and every person. It's going to be totally different, but at the end of the day, we all have to go in, first off, answering the question why. I ask myself that. Every trader I work with, every trade that they take, it's just asking that question, why did you take it? You need validation. Number two, where is your out? where is my stop and where am I saying enough's enough, I'm forgetting about this, I'm looking for the next one, and where's my profit target, and having a reasonable, managed expectation for that profit target.
Yeah. Something important for me is not just why I do it though. What's the fact, what the statistic about this trade? Because some people say, okay, I buy because I think the market will go up. Okay, show me the fact, show me the statistic of that trade.
Why is it going to go up?
Yeah.
How often are you right at that trade?
When I enter the positions, I know, okay, I have 70% of the market will go up against 30% that will go down. I have a fact in that trade. This means here, I think it's a hedge.
Yep.
You know, have to. What is the hedge of that positions? Most of the traders they trade because they think. When you trade that way, it's like you suppose that you know what the market is going to do. You never know what the market is going to do.
Absolutely not.
So
and
it's
that's
just
important.
statistics.
It's understanding how's this going to work right now. You were just talking about the NASDAQ this morning. It sold off. And you're looking for those buyers to come in and bring it back up. Well, it's the simple idea of a trending market is going to look for, if a trend up, you're going to look for that weakness to be long. If that's where that market is leading you, you got to find those spots where it sells off, that little bit of weakness. That's where you can get in, scoop up an opportunity with a cheap trade, low risk, bigger reward, and you can look for that opportunity upside.
You said bigger reward. I love to let the winning trade runs. I love that.
Oh, absolutely, as best as you can.
That. When I enter positions, I could break even and let the trade runs.
Okay, well let me ask you this. At what point do you say the run is over? So you're getting into a trade, let's just say you're long NASDAQ. NASDAQ is trending up nicely. How much are you going to let it give back before you're looking for your out? Are you going to trail a stop? Are you just no profit target and you'll let it go until it comes all the way back to where your stop loss was?
I have 4 different ways to make the trading stop loss.
Okay.
Sometimes I see the times. One way is, for example, for me, most of the training stayed in the way like 2 hours.
Okay.
So if I am in training and the training have 35 minutes, I say, okay, I
have time.
I have time.
I got until that 2 hour mark before I really have to consider.
That's
okay.
one of the way. I have 4 different ways.
All right. So number 1, time, 2 hours.
Yeah. The number 2 is I have indicator is the 20 EMA.
Okay.
When the market, when the price hit the 20 EMA, then I take out the position.
So we got a 20-day AMA.
Yeah.
Okay, so that's your next out. So we got time.
I trade
20
2 minutes.
AMA.
I trade 2 minutes.
Okay.
Yeah. So NASDAQ sometimes they move it so fast and leave the EMA behind. Then when he come back, okay, I take out positions. That's one. The other one is
so that's a more of a manual trailing stop.
Yeah.
You'll wait for that market. If it comes down, you're exiting right on the market. Just get out and lock in what you have.
Yeah.
Okay.
The other one is by the context.
Okay.
What price was important in the past? So I said, okay, if the market hit that level, I'm gonna watch what is gonna happen there.
Okay, so momentum, volume, how are other traders reacting at that pivotal level?
Yeah,
okay, so we have, just to bring it back, we have time, 2 hours. We have indicators help you determine a manual trailing stop, so you're watching that trade at all times. Lastly, the third one we have so far is the context of the market, in the sense of what a lot of us do. We frame out the market every day by levels, and we're looking at certain pivotal points, how that market reacts. So let's say NASDAQ gets up to a resistance level that it's tested a lot. That's what you're going to watch. If it shows resistance, exit.
For me, market is price, price, and price. It's no indicator, it's price.
Yep.
It's context. So before I enter to one position, I have to know, okay, where I am. Most of the people, they see, okay, it's not when what the candle is doing, it's where it's doing that. Most of the people, they just have an entry and they just focus in the entries. No, before the entry is the context. What have done the market in the past?
Right, you got to frame out each and every trade. It's not about just getting in, but it goes back to where's my out? How am I getting out? Okay, so we've got the 3. What's the fourth out?
The fourth one is momentum. For me, most of the trading have 3 momentums. Momentums, they rest.
Okay.
Momentum again, the rest. After the third one, I know I have to be looking when I'm gonna go out.
Okay, so let's just recap here. Jose's got 4 outs, a 2-hour time-based out. Obviously, inside of, I'm going to add a 5th one of yours, you do have profit targets that you are looking for the market to hit, right? You're not always just manually exiting based off of 4 different things. You do have certain profit targets, correct?
Yeah.
Okay.
Yeah, but most of the time I don't use target.
No.
Yeah, I take out the position with the stop loss because I always.
So you're always trailing.
Yeah, I always because you
You're
don't
always
know what
trying
the market. Okay. I can say most of the training maybe I stay 2 hours, but nothing is sure in Wall Street.
No, not at all.
Maybe the training that day is gonna have 6 hours, and I'm gonna take that too.
Okay. So you're always doing a sort of manual trailing stop based off of time, based off of momentum, the context of the trade, and a couple indicators.
I learned, Jesse Livermore, he said most of the traders, they are afraid when they are winning, and they take out the positions, and when they are losing, they have hope. They let the bad positions run again. When it's the opposite, when the trade is running, you have to have hope. I always have hope.
You have to.
Always have hope that it's going to give me more.
Well, and that helps. That goes back to your point. You were talking about the head game and the mental side of this. It's so important to first off, you got to have fun while you're doing this.
If you're not having fun, it's not easy to let the winning trade run.
No, it's not.
But I learned that by necessity. When I was in my job, sometimes I have to enter positions, and because I learned to train in my job, my boss sent me to do something, and the position was inside. And this happened frequently. I learned how to control my mind. Okay, be quiet. You will get to the computer in a few minutes. The position.
It's not going anywhere. That's funny. There's a lot of traders that I've spoken with that struggle with the same thing. I get in this trade. At what point am I getting out? I get anxious. I see it go profitable.
Break even and let the trades run. Just that.
I've always said one of my biggest things was just step away.
After you are break even, your psychology will be relaxed. Because what was that could happen? That the market goes against you and take you break even.
Nothing bad.
Nothing bad.
All right.
So let us win and trade room. Don't be afraid.
And that's the thing. You learned how to help your mental side of this. You learned how to control the emotions in these trades and recognized, hey, at this point, my fear kind of is gone, and now I can let things sit, and I'm okay with it. And every trader is going to be different, but they've got to learn. You've got to start to experience. At what point am I going to get out? At what point am I okay with just letting it sit? I think that's one of the hardest things to overcome. A lot of people, it takes a lot of loss to finally accept, hey, it's okay, I'm still moving in the right direction.
I passed the 150 step 1 in just one day. Just 3 trade with 15 contracts and let's run. In just one day. So most of the people, they see the 150 account like, it's impossible. At the beginning, I saw that. That is impossible. Nobody can do 90 US. It's possible. Just in the step 1, just one trade with 50 contracts and let that run.
Let it go.
Yeah.
Awesome.
Maybe you're gonna, give some free set. I call that all or nothing.
Awesome.
For the step 1. For step 2, it's different.
Perfect. Well, Yose, we're kind of getting to our time here. Real quick, if anyone does have any final questions for Yose before he goes out and enjoys the city for the next couple days, make sure you drop them in. Otherwise, one last thing to touch on that is coming out on Friday is going to be the unemployment situation. Make sure you keep an eye on that. Big market mover. So we do have a lot this week. We've got earnings. We've got trade talks. We've got rate cut pending, and we've got the employment situation. And then lastly, it's the big week for Top Step Trader. The reveal should be coming out, so everybody keep an eye. If you did click, I want to know what's coming out. Make sure you keep an eye on your emails, keep an eye on the website. We're really excited about that. And make sure you check out some of the good, not lucky videos we've been posting so far in the YouTube channel. Let us know what you think of those. Other than that, Yose, thank you for sitting down with us.
Yeah, well,
this is a pleasure.
Just last advice, have a trading plan. If you don't have a trading plan, you are just guessing. You should have a trading plan. Most of the traders they are trading, but they doesn't have trading plan. You should have a trading plan. It's impossible to make money if you don't have a trading plan in this.
Exactly. It goes back to everything we talk about, having that plan, framing things out. Jose's talking about know the statistics of that trade, so
Yeah.
that it helps you kind of, that again goes back to the mental thing. You can have a little bit more confidence in those trades. Other than that, we got one question here. Turtle Trade is asking, do you order flow scalp at all? Are you looking at order flow and scalping the
no, order
market?
flow, no,
You're sitting in most trades.
No.
Turtle Trade, we were talking about one of Yose's outs is 2 hours, so he's looking for a little bit longer time frame.
On the flow have a lot of numbers and
Exactly.
symbols.
Awesome. And T, thank you. I'm glad you think those are great videos. Other than that, everybody, thank you for tuning in. It was a pleasure. I will see you this afternoon at 2 p.m. Central Time with John Hoagland for the market recap. We'll take a look at how everything played out today. And thank you for tuning in. Enjoy your day and trade well. We'll see you in the markets.
Bye-bye.